What's going on with real estate prices in Middle Tennessee? I'm asked this a lot, and we've got some really good information for you. The federal government has just released the FHFA pricing charts. So we've got some fairly up-to-date information for you. Along with that, we've got this past week's stats for Rutherford County, which would include all of Murfreesboro, Smyrna, Laverne, Eagleville, Christiana, Las Casas, Walter Hill, anywhere in between, Rockville. So we will be covering all that. This is your Murfreesboro Real Estate Report. I am John Turner, the team lead of the Turner Victory Team at Onward Real Estate. This is a report that I bring to you each and every week, just looking at the past week's information, plus anything that's on a national level or just some things that I feel like we may need to cover. We're really going to dive in a little bit in this episode and really look at what's going on with pricing. So we will get to that here in just a second. In the meantime, or before we get to that, let's just recap what's happened for this past week. If you've seen this before, we break this down by $100,000 price points. Start out anything below $300,000 in Rutherford County, and then we go by $100,000 till we get above $1 million, and then we break it down by $250,000. So currently, we have 1,439 homes that are available and on the market. They're for sale here in Rutherford County. There were 56 new listings this week. There were 84 homes that went under contract. 54 homes actually went to closing this week. We had 55 homes that were pulled off the market. We could say canceled, expired. Another term we hear used a lot is delisted. So that gives us a total of 1,236 homes that have closed in the past 3 months in Rutherford County. And 5.84% of the available homes actually went under contract this week, and 3.75% closed. Now, I know that's just a bunch of numbers, but what does that tell us? Well, a couple of things I want to look at is, first of all, if you look here in the $400,000 to $500,000 range, we have less than 3 months supply of inventory there. Obviously, as we go up, we have more inventory. In the 900,000s, though, inventory's gotten a little tight there too. Several months ago, I was cautioning builders about building in that price point because we had a way over supply. But whenever you look at only 22 homes on the market compared to the 1,439 in the overall market, the 900,000s just do not make up a large percentage of the market. So it's easily swayed by 1 or 2 or 3 sales there. Just remember, anything below 6 months supply is considered a balanced market, even though I would argue once we start getting into the 3 month supply right now, it's really starting to creep into a buyer's market, just the way this market's going. So let's look at charts like we look at a lot of times. First of all, our new listing chart. If you notice, new listings were off quite a bit. We had 56 this week compared to 117 last week. So not only is that down, but this week last year we had 133 new listings. So definitely dropped way below this week on new listings. Good news on the pending fronts. Remember, this was a holiday week. Thanksgiving was in there, so we expected things to be down a little bit, but the 84 pending home sales was definitely up above the 64 for the same week last year. It was down slightly from 102 the week before, but again, being a holiday week, we expected that. Our month supply, we've actually seen a little bit of a jump here in the month supply. We went from 3.37 to 3.49. We still keep floating between that 3.3 to 3.5 month supply. Comparing it to last year, we were actually losing a little bit because if you remember in October and November, we saw some sales spike because the mortgage rates had dropped a little bit in previous months there. So this time last year, we had 2.35 month supply of inventory. This is the available inventory chart. What I want to do is I want to look at 2024 because right here is right here is the week we're in, but in 2024, there was 1,147 homes on the market. The week before that, 1,189, so a drop of 42. And you can see this curve we talked about, that throughout the summer, you kind of build an inventory, and then once we get into the fall, we start seeing it drop off. Well, in 2025, that's exactly what we're seeing, not quite as pronounced, but you could see how we've built up. Back in at the end of May, we hit the 1500s, and we've just been right along in the 1500s until we got into October. We dropped just barely below 1500, and then this week, 1439, we actually dropped 42 units from last week, which is the same exact amount of units that we did this time last year. So just interesting there. I expect that to continue to drop. Just remember, though, at 1439 units, this time last year we were 1147, so we still are about 300 units more on the market right now than what we had this time last year. And then our pending percentage, now we're getting 3 months worth of things right here. 3 years worth of information right here to look at. But in 23, the fall of 23, actually the fall of 24, sorry about that. We were up to 10.3%. And then, yeah, that's right, man, that was a huge spike this time last year where you can see pendings went up a higher percentage of the market. But the past, besides last year, we've been somewhere between almost 6 to 8% of the market going under contract. But it is interesting seeing that spike right there. We're not going to get into monthly closings yet since this is coming out on December 1st. I'm actually pulling this information on November 30th, and there's just not enough time to get all the data in there from all the different offices who have sold things. So next week we will cover the month of November and see where we ended up. Let's look briefly at the 30-year fixed rate mortgage. I take you back to January where we were at 7%. And then back in May, we were at 6.9% basically, and we've seen this steady decline up until the end of October. Then we saw a little bit of a rise here. We bottomed out at 6.17. Last week we were down 6.23, so we are still floating somewhere between 6 and 6.25. I will tell you a lot of things I'm seeing coming out because this is just a 30-year average, but there's FHA, VA, USDA, jumbo. There's all sorts of different loan programs out there. I'm seeing a lot of them now where you could get in below 6%. You could have a 5 in front of that. So that's very interesting. Now, let's jump to the FHFA charts. These are the charts that the federal government puts out every quarter. Now, this is for the third quarter. It just came out last week. This information is good through the end of September. So it takes them a couple of months to compile it. So just take that into account. It's not the latest information, but it's the latest we have from the federal government. And this is where they look and they compare home sales for like houses and what that price is doing. So it's not just looking across the board, a price per foot or anything like that. So I really like these because I think it gives us a good indication of where the market's going. If you look at this Allentown, Pennsylvania, year over year, they were up 9.7%. They lead the nation. For the quarter, they're up 3.3%. Buffalo, New York, New Jersey, Rochester, New York. So a lot of the Northeast is really leading in the appreciation. And this looks at year over year. So it's very interesting if you follow this down, and you could see everything going. So everything's positive up until you get to number 77. And what is the 77th ranked metro this quarter? That's the Nashville, Davidson, Murfreesboro, Franklin MSA. We are down year over year. We are down 0.2%. So basically flat, but it's very interesting for the third quarter. We're down 0.8%. So we were in the positive before the third quarter, and now we're down. This to me is a sign that we are seeing prices normalize. We've been seeing it come about. We've seen the appreciation really slow down, but now we've really seen with real data that our numbers are call it depreciation, negative appreciation, whatever you want to call it. I know last week I predicted we would be down somewhere, but we'd either be flat or down up to 2%. So I hit it almost right in the middle there. That's just what we're seeing on the streets right now. Remember, these prices do not take into effect what sellers are offering in concessions. And I'm going to tell you, it's highly unusual for a seller not to be paying some, if not all, of a buyer's closing cost. It's just, that's the market we're in right now. So even though it's considered a balanced market, buyers, you have a lot of leverage right now. So, but it's very interesting where we are now. Fortunately, we're not back here like Cape Coral, Florida, Fort Myers. Man, they are being hit hard. They're down almost 11% year over year. So, not seeing anything like that. They've got a lot of issues going on because of insurances and HOAs and different things going on down there. So a lot of Florida's been hit really hard. Traditionally, in Rutherford County, you would see somewhere between 4 and 5% appreciation throughout, pretty much every year on average. So to see us flattening out from a selling standpoint, not great, but from a buying standpoint, it's going to help with affordability. All right, here's a map of the nation that puts it really puts it in perspective. So anything that is dark blue, that means it's really leaning towards positive appreciation, and the darker the blue, the higher the appreciation. Anything in the orange or the red, whatever you want to call it, is negative appreciation. And the deeper that color is, the more negative it is. So if you look here at the Nashville MSA, and I'll zoom in a little bit for those looking on YouTube so you can see it just a little bit better here. For the quarter, we're down 0.8%. And if you take into account the last 4 quarters, so the fourth quarter of 2024 and the first 3 quarters of 2025, we're down 0.2% because earlier in the year we did have a positive appreciation. Areas of interest. In Tennessee, we actually had 1.5% appreciation, even though for the third quarter we were down 0.2%. So prices have still risen in Tennessee a little bit. It's interesting, if I go over here to Knoxville, 2.4% appreciation. So, and give this a second to catch up here. Memphis, pretty much flat. So the 1 quarter appreciation was down 1%, but for the year they're flat. Let me click off of this and see if I can get this highlighted a little bit more. So some of your big areas, we talked about the New York area. Down here in Florida, especially lower Florida, southern Florida, you are seeing a lot of negative appreciation. The Panhandle you are. Texas is being hit a little bit. California is kind of a mixed bag over here. It's interesting, North Dakota saw 6.3% appreciation. So it's just all over the board because real estate is local. Now, with that said, I want to look at this too. This is a share of inventory that is stale. We call this, this really is looking at how many homes have been delisted. And delisted means they're off the market, but they didn't sell. So either the listing expired or either the sellers decided to pull the house off the market. And the percentages in Nashville that have been delisted, let me blow this up here just so you can see a little bit better. 5.8% of all the homes that have been on the market have been pulled off the market. And 76% of the homes that are on the market are what they would consider stale, which means they've been on the market for over 60 days. That's what we're seeing here on the ground. We really are. So none of this is a surprise to me. We're going to put this in perspective and tell you what you need to do. If you are a seller in Murfreesboro, Tennessee, and Rutherford County, we'll talk about your strategy here in a second, but I do want to show you something else. A couple other things right here. We look at the motivation chart for those in Rutherford County, the sellers. This keeps growing. This line keeps going over to the right. Sellers are getting more motivated because those are on the market they're not seeing the activity that they expected to see. I can't tell you how many times I've explained this stuff to a seller. I've shown them the charts. I've done whatever. And here we are 2 months later, and they're like, okay, John, you told us it was going to be this way, but we thought we were the exception. Sellers, you're not the exception. I don't care what it is about your house, unless it is so super unique, there's not another one of them anywhere around. You are not the exception. Okay, I know you think you are. I hear it all the time. The other thing, if you look at in Rutherford County right now, 42% of all homes that are on the market have had a price cut. In Murfreesboro City, the motivation factor is there too. Sellers are getting more motivated. Those that have remained on the market over the holidays, they are more motivated. And 38% of the homes have seen a price cut. I want to take a look at this real quick. This is just for Murfreesboro. It's not populating for some reason for Rutherford County, but this is the price per square foot. Now, there's things that go into this, and I'm not going to put a lot of stock in the price per square foot, just the actual number. But if you look right here, it topped out around $215 a square foot back in May. Okay. We are in November. Look at November. It's gone down. It's steadily gone down. So it's gone from $215 to $208. So we've lost about $7 a square foot in value over the past, was that 6 months? Not even 6 months. Yeah, I guess 6 months there. And it's always moved. I mean, you go back to 2020 and I mean, look at how fast this went. I mean, we jumped up from 146 all the way up to 212 in a year and a half. So not really healthy there. But besides that, we've gone up, we've gone down, and we're still seeing some of that. And we are down right now. I expect us to stay down. I think we are going to see more depreciation. I think it's just got to happen. If you remember, I did a study on this 5 or 6 weeks ago and talking about how out of alignment we've gotten with our pricing and between our pricing and our wages. Okay, that's just the house prices. So even if the mortgage rates had stayed where they were in the threes, we were getting out of line where house prices were rising a lot faster than wages. There's a lot of reports out there right now that the housing market is not that strong. We're starting to get that information anyway. A lot of that's been delayed because of the government shutdown, and it's starting to come out now. Whenever you are not in a strong jobs market, you do not see the increase in wages like you would in a market where people are fighting over workers. I mean, that's just supply and demand. So I don't know that wages have been going up quicker than what they were, but I don't know if that trend's going to continue. But at some point, we've got to have house prices and wages come in line, because right now we got house prices up here and wages here. And we can't have house prices keep going up because people just can't buy them. They can't make that leap. So if we're at these two places, either wages have to go up to meet house prices, right? Or house prices have to come down to meet wages, or a combination. I think we're going to see house prices ease some, and hopefully we're going to see wages come up. And the faster wages can come up, the slower the prices will have to come down. But either way, I think we're going to see some more easing of prices. So if I am a seller in Middle Tennessee, if I'm a seller in Murfreesboro, if I'm a seller in Rutherford County, I'm taking in this information, and what I want to do is I want to get ahead of the market. Okay, so if we think prices are going to continue to go down, and you're trying to price up here because your neighbor sold for here, well, that's fine. What they sold a few months ago. Remember what we just looked at? Price per square foot was higher back then. So instead of meeting the market, I want to price right below the market because this market's going to come down. Okay, I may even want to jump further down than that. Most sellers, unless you bought your house in the past couple of years, you've got a lot of equity. And I know you want to make as much money as you can on the sale of the house, but the longer you sit on the market, the more stale your home gets, the less money you're going to get for it. Plus, if you've got a market that keeps coming down, you're going to be one of those 42% that are having to reduce their price, and then you're chasing the market. And it's never a fun time to be chasing the market. We saw this back in 2007, 2008. We saw a lot of sellers chasing the market. And in hindsight, if they would have priced it the way it needed to be priced from the very start, they would have come out a lot better. Okay. Now, I don't think we're going to see the price drops that we saw like we did back then in the Great Recession. But I will tell you this, if wages cannot catch up, at some point, the prices are going to have to keep coming down. Again, I'm not predicting 15, 20%, drops or anything like that. But I'm trying to be realistic about this and look at the data and what it's showing us. And that gap has to be, we have to bridge that gap some way. So keep that in mind. Buyers, you've got some leverage right now. There are sellers that are ready to sell. So our price is going to go down. They may, and you may. I know I've got some people that are sitting on the sideline saying, "Well, I think prices may go down. I'm going to keep waiting." You may be right. You may not be. I do know this, that if you're renting, you're throwing your money away. So if you're in a position to buy and you're going to stay in the house for a while, why not go ahead and buy instead of throwing your money away? When is the best time to buy? It's really when it's best for you. So that's what we've got today on the Murfreesboro Real Estate Report. I hope that you get some value out of this. We bring it to you every week. Please comment below. Let us know what questions you have. Let us know if you think this is valuable information. Any questions you have, we'll be more than happy to answer in next week's episode. But until then, I'm John Turner, the team lead of the Turner Victory Team at Onward Real Estate. I appreciate you tuning in, and I hope you make it a great week, and we'll see you next week.